Good afternoon, everybody, and welcome to this webinar on IR35 and the coronavirus and updates on that. My name is Andy Chamberlain. I am the Director of Policy and External Affairs. I've just noticed that I haven't yet updated my title card from the one that I borrowed to hastily put these slides together. I'll also introduce my co-presenter today, Alasdair Hutchison. Alasdair, are you there?
Yep. Hi, Andy.
Hi, Alasdair. Okay, so what we're going to do today is we're going to look first of all at the IR35 changes that were going to come in and haven't come in. That's going to be the first part. And then I'm going to hand over to Alasdair, who's going to update us on the coronavirus. And Alasdair is very welcome to butt in as well on anything that I might be saying wrong about IR35. And I will too butt in wherever I feel like it might be helpful for me to do so on the COVID-19 update. So, without further ado, if I can get this working, here we go. So, oh, and by the way, if you have questions, please just put them into the chat box or into the questions box, and we will try to get to them as we go along and leave some time at the end to cover those questions as well. There's quite a few of you with us today. So we may not be able to answer all of the questions, but we will try our best. So IR35. Now, as many of you will know, IPSE is always going on about IR35. We don't like IR35. In fact, we were originally called the Professional Contractors Group, or PCG, which was a group of contractors which formed in direct opposition to the original IR35, which has been in place since the year 2000. And as that was forming in 1999, a bunch of contractors got together and said, this is a terrible thing which is coming. We need to form a group to lobby against it. And that's kind of our core. And we now talk about lots of different things, but IR35 really is the issue which I think animates us as an organisation and our members the most. Maybe up until the last week or so, because we're now in a completely new world, as we all understand. But IR35 is still very important to us. We strongly opposed what the government was proposing to do in the private sector. We also opposed what they did do in the public sector 3 years ago. And we responded to numerous consultations. We've commissioned research. We've carried out our own research. We have formed alliances with various groups to lobby against this, including the CBI, the Recruitment and Employment Confederation, ABSCO, lots of our friends on this. We're involved in the lobby of Parliament. The pictures that you can see there were from about 5 weeks ago, I think, that we were involved in that protest outside of Parliament, and then we went inside and lobbied MPs directly. That's a picture of David Davis there with me on the right hand side. He's a supportive MP and didn't want to see the IR35 changes coming in either. We also, sorry, I'm such a megalomaniac having this is the only other picture of me in this whole slide deck, I promise. We also submitted evidence to a House of Lords inquiry, which has been ongoing for the last 6 weeks or so, about the IR35 changes in the private sector. And we were very grateful to the committee for hearing what we had to say on that. And we put our concerns to that committee pretty bluntly, that we thought that this measure was going to be disastrous for business and the economy. Now, last week, on Monday of last week, the committee held another hearing in which they were taking evidence from some HMRC officials, and the chairman of the committee, Lord Forsyth, called at that meeting for the IR35 changes to be delayed in light of the coronavirus crisis. The very next day in Parliament, Steve Barclay, Chief Secretary to the Treasury, gave this statement, which you can see in front of you now, and confirmed that the changes would be delayed or postponed, as he put it, and that this was a response to the coronavirus outbreak. he was very keen to stress that this was a deferral and not a cancellation, and that the government remains committed to reintroducing the policy to ensure that those people who work like employees pay the same tax as employees. Except the trouble is, as we all know, the problem with this measure is that it was extending to people who did not work like employees, who did not have employee rights and were not employees. And this was the central controversy and basically our main problem with the proposal. Let's just have a look then at how this is now going to tie out, because we had a situation where this was coming in April, so just a couple of weeks away from now, this was going to be due to come in. As you will all be aware, lots of businesses already put in place lots of measures, some of them disastrous, in order to deal with this shift in policy. That's now been revoked. So let's just have a quick look at what was going to happen, right, to remind ourselves. What was going to happen is that in the private sector, liability for determining IR35 was going to be shifted to end clients. So it would be the end clients who were going to have to think about, does IR35 apply to each one of these engagements, all these contractors? Is it going to apply to each one of them? Is it going to apply to some of them? Is it going to apply to none of them? It was going to be the clients that were going to have to think about that. That was a big shift, because up until now, and indeed currently now, it's contractors in the private sector who have to think about that IR35 status. It's you guys, it's IPSE members. They're the ones that have to consider IR35 status. They were going to make it your clients who are going to have to think about it. And the other big change was going to be that where those clients decided that IR35 does apply, then tax would be deducted at source from any payments to the contractors. And that might be done by an agency. The term used was the fee payer, whoever is paying the fees of the contractor, whoever's paying the limited company contractor or the limited company that contractor works within. They would have the liability to deduct tax and NI just as if they were paying an employee. That was the proposal. This would have brought the private sector rules into line with the public sector rules. This is what is happening in the public sector now and has happened in the public sector since April 2017. More about that a bit later on. And this was all going to happen after April the 6th onwards. Now, there were going to be some further tweaks as well, which are now not going to happen, right? So let's just quickly look at those. I mean, the main one I want to talk about is the one in the middle there, the status determination statement, because these have already been issued in a lot of cases. So I'm going to talk about that. There were some things that were potentially sort of good that were going to happen, though I wouldn't have got too excited about it, namely the client-led status disagreement process. There was going to be a new thing which would have applied in the public sector too, which would have given contractors the right to challenge an IR35 assessment made by their client. Now, I think actually most of the time that would have been a fairly futile exercise. I think that the clients would have just said, oh, okay, thanks, we've taken it on board that you disagree with us, but we're sticking to our decision anyway. But nevertheless, there was going to be some sort of mechanism there which might have been a ray of hope for some people in the public sector. That's now not going to happen in the public sector either. So there's a slight, a negative there. A new thing was going to be that the client would have to tell the contractor directly what the IR35 decision was. They don't have to do that in the public sector at the moment. They just have to tell the supply chain. So then the contractor finds out via an agency, oh, it's been decided that you're caught by IR35, and they don't even know who has made that decision or who to go and talk to about that decision. So that was going to change as well. There was also going to be this small company exemption thing, but that was only ever going to apply in the private sector. And there was going to be something called liability transfer, but we don't need to worry about that. The CES tool has been improved in inverted commas. I still think it's not particularly great. We're not going to talk about the CES tool too much today. That's still there though. The CES tool still sits there and is operating on its own anyway. And those improvements or changes are still there as well. Right, the status determination statements, or the SDS. This is it. Now, what the SDS was really just a kind of formalization of what clients need to do. So they would have been legally obliged to provide this thing called a status determination statement. And there was three aspects to it. Basically, you had to say what's the IR35 decision? Is it court or is it not court? You had to give the reasons for that decision, and clients had to take reasonable care when making that decision. This was trying to stop them from doing blanket determinations. If it didn't do all three of those things, it wasn't an SDS. But anyway, now the SDS is basically moot. It doesn't exist, right? There is no SDS anymore. This is important because a lot of you might have been given an SDS already by your clients who were preparing for the April changes. That is now a worthless bit of paper. I can't really stress this enough. It is just the opinion of someone else on what the IR35 status is of your engagement. It has no legal bearing whatsoever. So you can just rip that up and ignore it. Okay, so just so we're clear about that. However, what some people have been in touch with me to say that, look, their agency is now saying to them, okay, look, you received an SDS and the client said you were caught by IR35, but now that doesn't really mean anything anymore, as we've just discussed. So it's up to you. What do you want to do? You can carry on and assume that IR35 does apply, and perhaps go and work via an umbrella company, because that was the way it was all going, and you'd have all that tax deducted at source. Or you can just ignore all that and we'll just carry on paying you gross. And contractors are worried because they still have the IR35 liability, right? And they're now thinking, well, is HMRC now going to come after me and say, look, your client gave an SDS saying that you were caught by IR35 and you're now just paying yourself gross and paying tax like a company? You know, are we going to investigate you? Now, here's the thing on that. Yes, contractors are definitely at risk of investigation from HMRC, as they always have been. HMRC have given us an assurance over the phone. It's not in writing, but they have given us an assurance over the phone that they are not interested in the SDSs. They're not going to seek out and find out what your client decided about your IR35 status. But nevertheless, you may well be nervous about it. You also may have found that your client, having decided that IR35 applied, was presenting you with a new contract that was going to be operational from April, right? And that contract may well be what we call unfriendly for IR35 purposes. In other words, it contains lots of clauses which indicate that IR35 does apply. You may want to have a look at that contract. No, in fact, you do want to have a look at that contract. And I would recommend that you get that contract reviewed independently. IPSE have a contract review service. Other contract review services are available. If the contract review service comes back and says this contract is caught by IR35, you should get a new contract. Or the contract review service might say, look, this isn't too bad, but you've got a couple of clauses in here which are a bit unhelpful. In which case, I would get those clauses changed if you can. You then also want to make sure that you've still got your tax investigation insurance, because you're still at risk of investigation, not specifically because you had this thing with a client with an SDS, but just because you've always had that, right? So it's just a reminder to contractors that they are liable for IR35 decisions at the moment, their own IR35 decisions. So you might want to have that insurance in place, because if you do get investigated, as we all know, it is a nightmare. If you're an IPSE member, you're already covered. IPSE membership covers you for tax investigation insurance. It covers you for an IR35 investigation, basically. And we will go into bat if HMRC write to you and say, have you thought about IR35? Then, you know, we can help you. That's what we're here for. Okay. The public sector rules still apply. So if your client is a public sector organisation, like a governmental department or a local authority, then it will still determine the IR35 status of the engagement, just as it has done ever since 2017. That's not changing. And you'll be taxed at source if the client decides that IR35 does apply. And you'll get they'll be told, oh, you're a bit like an employee, we're going to tax you like an employee, but you get no rights, as we all know, the inherent unfairness of this nonsense that they were trying to bring into the private sector as well. There are calls to suspend or repeal the public sector rules in light of the coronavirus crisis, because a lot of NHS locum doctors are going to be needed to come in, and do they really want to be faffing around with IR35 decisions there as well? IPSE is going to join those calls to suspend that, because we think that those rules are terrible anyway, and at this time no doubt they're getting in the way of what could be providing a vital life-saving service. So we support those calls, but at the moment the government has indicated that it will not suspend the public sector rules, but who knows, it's a fast-moving world. So a lot of people have been asking, well, it's great that there's a delay, but the damage is already done. Many of you on here may have been working for clients, particularly in the banking sector, but not just the banking sector, who decided some weeks and months ago that not only would they decide that everyone was caught by IR35, but they would actually not want to get engaged in the IR35 world at all. They were just terrified of getting involved with these rules. So they just said, no more limited company contractors. We're not going to engage them. No more limited contractors. No more limited company contractors at all under any circumstances, which meant that lots of people had to close their businesses, which, it's unknown to me whether the government foresaw that this would happen. But this was a terrible outcome from the legislation and incredibly damaging for business. Our hope is that those clients will return to contractors now that this world has changed for now, but we recognise that for some people this is too little, too late. This legislation is calamitous, and IPSE is going to spend the next year reinforcing the message that this is calamitous legislation, and our aim, our ambition is that we make sure that this does not come in next year, despite the government saying that it will. And we are already talking to government about how this is an opportunity to think about alternatives to this that will be less damaging. And I can assure you that we are doing that. And I just want to thank as well any members that are on this call who have helped us and stuck by us through this time of lobbying. We have kept this issue at the top of the agenda with your help, and you've written to your MPs, you've tweeted your MPs, you've attended our hustings during the election, you've been right behind us, and I really appreciate that. And because we've kept this issue at the top of the agenda, it meant that it was quick to be dropped in light of this current crisis. So, thank you a lot for that. And I think that that's it for me on IR35 for now, because I want to hand over to Alasdair. But if you do have any questions, keep them coming in. I'll try to address them at the end. Over to you, Alasdair.
Thanks very much, Andy. I should say as well, Andy's in control of the clicker, so I may just have to nudge him at certain points to move the slides on.
Nudge me, yeah. This is remote working. It's a little bit haphazard.
I don't want to take up too much time. I think really the purpose of what I want to do with this section specifically on the coronavirus is there's been so much kind of news and information out there at the moment. I want to just give people a kind of headline summary of what the government has announced, specifically if you're self-employed. We'll get into a bit of the detail on what kind of company structure you operate through and what that might mean. So just a kind of quick headline summary of the two kind of broad areas that the government is taking action on. A little update on what IPSE have been doing to represent you guys, members, and the wider self-employed, the kind of campaigning that we've been doing, generating some kind of interest around self-employed people and trying to get the government to do a bit more, because as I'll come on to, we don't feel that the package of measures announced so far is sufficient. And then really wrap up by kind of signposting you towards some useful sources of information and some kind of idea of, in terms of what IPSE is doing in the near future, kind of what our priorities will be through this period as well. So Andy, if you want to just go on to the next slide.
Sure.
So as I was saying, broadly speaking, government, in terms of the self-employed, has taken two kind of areas to try and make people's lives a bit easier. The first is around making the welfare system more generous, easier to access, quicker to access. And the second is around a kind of broader range of business taxation and finance support measures. The challenge with these is that, as we all know, self-employment freelancing does not naturally fit neatly into business policy or household policy. It often tends to be kind of in the gap of those two approaches. But I'll quickly summarize, beginning with the business taxation and finance support measures, what the government has done so far, and what you may be interested in accessing in terms of schemes. So firstly, the coronavirus business interruption loan scheme. Now this is essentially where the government is saying they will provide a guarantee of 80% on loans of up to £5 million. The basic idea being this scheme will help more businesses access the finance that they need. Government will not charge businesses for this guarantee and will also cover the first 12 months of interest payments on it. I think Andy has actually spoken to the British Business Bank, who are kind of in charge of administering this scheme, and they've said, you know, if you're self-employed, you will be able to apply to this scheme as long as you're operating through a business bank account, and I think generating more than 50% of your turnover from trading activity. So this will include sole traders, freelancers, and limited partnerships.
That's right, Alasdair. And you can get these loans via what they call their partners, which there's a page of that on the on their website, the British Business Bank website. But it's a lot of that the high street banks, the household names that you know. You can go there to get these loans.
One small wrinkle on that, which I haven't had time to fully digest it this morning, but I did see something in the Times in terms of those kind of you know, the lenders, they might be looking at adding on specific terms and conditions to the loans and things like that. So that's just something to be aware of. But as I say, there is information about that in the public domain. And broadly speaking, this is an option that is available to self-employed people. The second one, which is slightly different, the small business grant funding. So essentially, government is providing additional funding for local authorities to support small businesses that already pay little or no business rates. So these will be people who already receive the small business rate relief or rural rate relief. And this will essentially be a one-off grant of up to £10,000 for eligible businesses to meet their ongoing business costs. As I say, this will not apply to the kind of broad sweep of self-employed people. You will only be eligible if you are a business that occupies a property and is already kind of eligible for those small business rate reliefs. Getting into some of the slightly more practical things, which I think will be of interest to its members and those on this call. So on tax and VAT, the next set of self-assessment payments have been deferred from July to January 2021 for the self-employed. And the government has also said it's deferring the next quarter of VAT through to the end of June. Those payments can now be paid at the end of the financial year. And I think, Andy, there was a point as well that you've been in touch with HMRC on around dividends and payment on account as well.
Yeah, I just wanted to check. We are trying to check with government that any dividend income tax on your dividends, which is also on payment on account, is also deferred. I think it is. I'm looking for them to sort of make that crystal clear in a communication. But my understanding that is also deferred.
Thanks. And a kind of similar one to that along the same lines is the so-called time to pay arrangements. So really any businesses and self-employed people in financial distress or with outstanding tax liabilities may be eligible to receive support with their tax affairs through HMRC's time to pay service. These are kind of agreed on a case-by-case basis, tailored to individual circumstances and liabilities. But they've set up a kind of dedicated helpline for small businesses and self-employed who are concerned about paying their tax due to the coronavirus, which we've noted there. I should say as well, the links and kind of further information on all these different announcements is available on IPSE's website. We've got a kind of single dedicated page where we're trying to capture as much of this information as possible. And then really just to wrap up on this, as Andy mentioned, IR35 has been delayed as well, so I don't need to go into too much detail on that. And then I think the other two angles to this in terms of the business tax finance support, is around mortgage and rent. So mortgage lenders have announced some support if you have to take time off work because of coronavirus. You may have seen news that there's a repayment holiday of up to 3 months, including buy-to-let mortgages as well. And the government has also announced emergency legislation to suspend new evictions from social or private rented accommodation. Your landlord, I think generally speaking, the intention of the legislation is that they will not be able to apply to the court to start possession proceedings until you've missed rent payments for at least 3 months. So again, I think they're trying to build in a bit of kind of, a bit of a backstop in terms of people's finances, so they're not facing an immediate cliff edge. And then again, we're trying to collate as much of this information on the IPSE website as possible, but you'll have seen that the banks and kind of building societies have undertaken a kind of various range of actions in terms of access to finance and lending. As I say, we don't need to kind of go into the details and the ins and outs of all these things, but broadly speaking, what they're doing are things like saying you'll be able to access savings and fixed term accounts with no penalties. They won't be charging fees for missed payments on credit cards, loans, mortgages, and there's some kind of extra borrowing options as well in terms of changes to credit limits and overdraft facilities. So that's kind of one set of things. And the second, so I'll have to take a deep breath for this bit, unfortunately, because it is tremendously complex, is around welfare and benefit support. Now, again, this comes with a lot of caveats and nuances, and it would require a much longer webinar to kind of go into the ins and outs of this. We are working with a lot of other organizations to get as clear guidance on what is available for self-employed people, primarily through universal credit. And we'll be updating a kind of page on a kind of specific page on our website in this as well. It's a really tricky area because it's really difficult to provide an accurate forecast of what is available and how much you'll get. It's all largely dependent on your individual circumstances and your household. So to give a kind of real top level summary, just in case you've, as I say, missed some of the announcements that the government has been making, I'd say 2 big things that they've done. First is if you are sick or unable to work, employment and support allowance is the kind of primary means of getting some kind of financial recourse. So obviously, as we all know, self-employed people are not entitled to statutory sick pay. However, you might be able to claim this so-called new style employment support allowance if you're ill. This is one of the changes they've made, is that this is now payable from the first day of sickness rather than the 8th. That was one of the measures announced at the budget. But we're talking very small amounts here. So eligible claimants under 25 are entitled to about £57.90 per week, over 25, £73.10 a week. So really, really small amounts. And I think really this is why the government has tried to do more in terms of universal credit. Because I think even at IPSE, we recognised very early on that this was not going to be just a health crisis. This will be a real challenge for people's incomes through the next few months. So what they've done in terms of universal credit, which is the kind of primary channel through which people will be kind of directed if they're seeing their income really decline to very little or zero, they've done a couple of things. So UC is essentially a payment to help with your living costs. It's paid monthly, and it's specifically designed to replace a whole suite of older existing benefits. So your child tax credit, housing benefit, working tax credit. It kind of rolls all this into one calculation, and it's designed as a kind of in and out of work benefit. So it's meant to be a kind of a catch-all. One thing that the government has done, which has been welcome because IPSE in the past have raised a lot of concern about it, is removed what is known as the minimum income floor for the self-employed who are applying to UC. Now, the minimum income floor was something which we campaigned really strongly against, because it basically was a design to sort of look at to find an assumed level of earnings. And we always thought that this just never really captured the kind of volatile nature of self-employed people's incomes. It was giving a kind of artificial forecast of what you were likely to earn, and often meant you ended up in a perverse situation where If you earned a little bit more than this minimum income floor, your universal credit would get deducted. And if you earned less than it, it wouldn't be topped up. So we always thought that this was a kind of badly designed bit of policy. So the government has, for anyone affected economically by the coronavirus, just decided to remove this for the self-employed. What does this mean in practice? Well, in addition to that, they've increased the total amount of funding they're putting into universal credit by £1,000 a year. Again, not very much. And this essentially means you'll be able to kind of access UC at a better rate than was you were kind of previously able to do. There's a whole lot of kind of eligibility requirements around universal credit, and as I say, the calculations itself are very much dependent on your housing situation, whether you have children, caring responsibilities. But broadly speaking, they've now increased it so that we are looking at a rate equivalent to sick pay, which is around about £94.25p per week. Again, as I'm sure a lot of your first reaction to that is, and certainly the message that IPSE have been putting out both to government and the media is, this is really, really not enough. This will not be sufficient to cover the shortfall in people's incomes. And there are other bits worth considering. If you are in a position where you're looking at universal credit, if you have over £16,000 in savings, you are technically not eligible to apply for universal credit. So at the moment, unfortunately, the working kind of assumption of government's policy, whether they have intended this or not, is you will have to look into accessing your savings in order to get you through the next few months until you're able to apply for universal credit. As I say, this is a really kind of sprawling area of policy, very difficult to kind of get your head around if you've never interacted with the system before. You've probably seen in the last few days that the demand on universal credit and the phone lines and the online applications has been huge already. So this is something that we're really trying to kind of get as clear guidance on for the self-employed who will be kind of coming to this quite labyrinthine system for the first time. There's other considerations to take into account. So there's a 5-week wait from when you get your first payment, although you can apply for advance. So there's different kind of bits and pieces like that. We have, in our discussions with government and other people, been those who have kind of made these changes and are sort of trying to get people to make the most out of them have highlighted certain elements. So the government has uplifted the amount of the housing allowance that is factored into your calculation. So this is something that could particularly benefit your kind of overall universal credit amount that you get at the end. So there's bits of the system that they've increased the amounts to kind of higher levels than before, which means that your overall package will kind of look slightly better than if you'd been doing this kind of 2-3 months ago. But as I'll kind of get on to in terms of what IPSE is calling for, campaigning for, we just do not think that this is an appropriate way to deal with the kind of vast sums of income that some people who've contacted us are seeing disappear. We just don't think it's going to come anywhere near, not even replacing, but even kind of making up 50% of the amount of money that people are losing, particularly when you compare it to the package that I think we've all seen that have been announced for employees, which is for kind of 80% coverage up to £2,500 a month. As I say, we will be putting a lot more information out on this. I don't want to take too much time up on it because it's incredibly complex, and as I say, it's really dependent on your individual circumstances. But I thought I would give a kind of quick overview just now before I get on to kind of what we're expecting from government on the self-employed in the next couple of days and what IPSE has been doing. And I've just left a question there at the end, which Andy, hopefully you can just kind of very quickly cover, because I know we've had a lot of questions on this. In terms of both this welfare benefits package, the business support package, the key thing that we're hearing a lot from is kind of, what if I work through my own limited company? What's the entitlement versus if I was just operating as a sole trader or a freelancer or any other form? I don't know if you want to kind of quickly summarize
Yeah, sure.
what the situation is there.
So I think that some of the big questions are, if you look at what they're calling the jobs protection scheme, which is this 80% of pay to employees, up to a cap of £2,500 a month. People are saying, well, if I work for my own limited company, am I eligible for that? Now, I think the answer is yes, but only on whatever you might pay yourself as a salary. And I know that for a lot of people inside a limited company, they pay themselves a small salary, quite sensibly in my view, and then take out any additional income as dividends. So the 80% of your salary, you might only pay yourself, say, something like £10,000 or even less per year in salary. You might be able to pay 80%, or you might be able to claim 80% of that, but that's obviously going to be not very much per month. I do not think that there is going to be anything which is going to be a sort of income replacement for any dividends that you might have reasonably expected to be able to draw down from your company, but now cannot, because that income into your company has gone away. We have tried to explain to the government that this is how many self-employed people quite legitimately organise their affairs, but we are hitting a brick wall with that one. So we're going to keep trying, but that is going to be my honest. If I'm here to try and manage any expectations on that issue, I would say, you know, if you get most of your income as dividends, it's going to be unlikely that the government are going to find something to replace that. I think that the some of the measures announced around the loans will be applicable, as we've already covered. So the coronavirus business interruption loan, or CBILS, I think that you can apply for those. I think that the tax holidays and deferrals will apply as well. So these are the things that you can expect, but I'm not sure about the but I think that it may not go much beyond that, I'm afraid. So then you're back into this UC system, which as Alasdair did touch on, I would sort of note, although the headline figure is 94 quid a week, which is not very many people will feel that's going to go anywhere near to meet their living costs, there is quite a generous housing allowance within it. So if you have rent, for example, it may go up to about 1,500–1,600 quid a month, depending on your family situation, which is getting actually kind of close to the amount that the 80% figure is when you cap that at the £2,500 a month, because that's UC isn't taxed. So by the time you then take the tax off the 2,500, which actually no one's clear about whether that is, how that is taxed and if it is taxed, but presuming that it is, you are getting up to some level of support which is similar to that.
Thanks, Andy. That was really, really helpful. So just a very quick update on kind of what IPSE's been doing to lobby the government and what we will be doing further to kind of support you guys, members, and kind of the wider self-employed community over the next few weeks. We started getting a lot of questions about the coronavirus actually way back in February, which seems like a lifetime ago now. And we very quickly wrote to the government. We wrote to Matt Hancock and Theresa Coffey, who is the Secretary of State for Work and Pensions, with a kind of early warning call, really, for much better guidance for self-employed people. We felt that a lot of the guidance that was going out really only applied to employers and to basically to kind of distribute information down to their employees, and it wasn't taking account of the situation that many freelancers were facing, even if they're working on site alongside kind of full-time employees. And we also kind of floated the idea of an emergency fund for the self-employed. I think our key line through all of this, in terms of what we've been saying to the media, to select committees that we've given evidence to MPs that we're speaking with, and to government as well, is trying to get people to focus really intently on this question of income and how are we going to try and mitigate some of the lost income that people are going to experience as a result of work basically drying up and this wider economic shutdown. So you might have seen either myself, Andy, or our other colleague Ryan appearing on BBC, Sky, LBC, in your newspaper in the last few weeks to try and drum up as much attention on this kind of critical policy issue as possible. And I think it's become even more acute as we've seen the kind of bailout measures announced for bigger businesses, the kind of business rates reliefs, loan packages available to smaller firms, and of course the support that has been extended to employees. This is I think this question about what support is available for the self-employed is the big hole left in the government's kind of economic response. So we've been working extremely hard, both as IPSE, but also with lots of other organisations across the whole kind of freelancing field. We've been working really closely with the Creative Industries Federation, with all sorts of different organisations, British Dentists Associations, and we've done a couple of things. We've written a letter to the Prime Minister and launched a petition, which now has over 50,000 signatures, or near enough that. And our basic call is
100. Oh, yeah.
And our basic call is for a temporary income protection fund. We've published details on our website in terms of the kind of policy mechanics of this, how it would work. But we're really asking for the UK government to take some inspiration from countries like Norway that have promised to cover about 80% of freelancer and self-employed people's incomes based on their last sort of 3 years of tax returns, to get a rough idea of what people were earning and what they could have reasonably expected to have earned this year if this crisis hadn't happened. We think that that's a reasonable kind of way of calculating it, and we also we've been trying to stress to government that, you know, the self-employed is a complex population of people, but anything that they bring forward should be sort of universal in its spirit. So it should be for sole traders, freelancers, limited company. You know, if you sort of broadly define yourself as self-employed, we feel like this should kind of cover you in terms of what we'll announce. I think we've just heard today that the announcement will come tomorrow in terms of what the government is going to announce. So we will obviously be putting out communications on that, drilling into the detail about you know, who will kind of be covered in the scheme, who might potentially not be if the government decides to put some restrictions and limits on it as well. So keep an eye on our website, and we'll probably be putting out an email to members as well. Andy, I don't know if you've got anything else to add on that.
No, I mean, this has been a delay in announcing this scheme, whatever it's going to look like for self-employed people, when you compare it to how quickly they move to protect employees and businesses as well. And the reason is because the government find the self-employed a very difficult group to sort of know who they are. There's a lot of churn in self-employment. So even if we based it on tax returns of the last year, one tax return of last year, well, 20% of those people who were self-employed that year are not self-employed this year. And the same goes, there are people who are self-employed now who were not self-employed then. This all makes it quite a head-scratching, difficult thing for the government. We have been talking to the highest levels of government and trying to persuade them to be as generous as possible. Our general view is that it is better to pay lots of people lots of money, even if some of those people don't necessarily need it, in order to ensure that those that do need it get it. And they are sort of saying, well, we've got limited money, we've got responsibility for the public purse. In this time of crisis, we need to make sure that whatever funds are available are going to those that really need it. So that's the sort of tussle that we're in at the moment. You're right, Alasdair, the talk, I mean, I haven't heard from the government about when an announcement is expected, but all the talk today seems to be that it's going to be tomorrow afternoon. So we will wait with bated breath for that. We are speaking to some senior members of the government later on today, so we're going to continue to have a look at, so we might know a bit more later today, but it looks like tomorrow we're going to get to see what this thing is, and then we'll be able to comment on whether what we think of it.
Yeah. And I think on to the next and I think final slide. So what else will we be doing, and how can you kind of stay up to date? So we do have a kind of website hub where we're putting on as much information as possible, really trying to cover what we're doing as IPSE in terms of our lobbying efforts, but also trying to keep you up to speed with what the government announcements are. As I say, that will kind of be our main kind of daily funnel of information, and we're hoping to really get some really accurate, kind of good information up there on the welfare and benefits side fairly soon. We're also planning to do a lot more webinars over the next few weeks, possibly, and bringing in kind of outside experts as well. This was very much just to kind of keep you up to date with what we're doing and the general picture. So it's just myself and Andy, but we're in touch with the DWP, the Business Department, the Small Business Commissioner. So we will kind of be able to answer specific questions that you have, if they're on cash flow, if they're on benefits, if they're on what you're entitled to. So we can kind of bring those people in as well. And we're working with other kind of groups, stakeholders as well, the Business Department, Money Supermarket and Money Saving Expert, as I say, to get more kind of clear information, Q&As up and running. And beyond that, we're just still going to keep campaigning, keep speaking to government through this crisis and on a whole kind of range of policy issues that will be affecting members, including kind of still talking about IR35. And that's kind of our primary focus for the next few weeks.
Thanks, Alasdair. So there's a bit of information at the end there about how you can contact us and follow us on various channels to see what we are up to, and a link to our petition as well. So feel free to click on there and add your signature. We'd be very grateful. Yes, and then now the questions, which I will endeavour to see, but I was struggling a little bit earlier. I can see one question here which says, why did you choose the change.org for the petition over the official parliamentary petition page? Well, actually, we started it off in the parliamentary one, but they were taking an age to publish it, and we were under a lot of pressure to get something out there so that people could sign up to it, so that we could demonstrate the groundswell of feeling that the government must do more and put a bit of pressure on. So that's why we went with change.org, because it's instantaneous. You can publish a petition and it's up there and you can start promoting it. I'm struggling, Alasdair, to see all the questions. Are you able to scroll through them? I can only see a very tiny.
Yeah, if you open it up and scroll down, if you want, Andy, I can read a couple out and you can perhaps
Go on then, you do it.
field them. So the first one, do limited company contractors fall into the self-employed category even though we are employees of our limited company? You've kind of touched on that one already, but maybe helpful just to refresh on that again.
So the term self-employment is a catch-all term, and it doesn't actually mean anything legally. But yes, I believe that you are self-employed if you work for a limited company. The other main way of being self-employed is to work as a sole trader. In which case you don't have an incorporation, but you are self-employed. In terms of this package that will be announced, we'll have to wait and see, but I think it is likely that it's going to be targeted mainly at sole traders and for limited companies, that you're looking at then at the business measures that they've announced. As I said before, despite us explaining to the government that many people's income is derived via dividends, they are currently unwilling to consider any kind of income replacement protection scheme, whatever you want to call it, for dividends, because they don't see dividends as a salary, and that's their sort of essential problem with it. But we will keep on pressing them on that point.
One here on IR35, Andy. What is the legal status of the deferral given IR35 is in the statute book?
Yeah, so it's essentially, it takes effect from the private sector changes, I take it that you mean. That's what we're talking about here. At the moment, they are going to take effect from April 2021. But that gives us another year to explain to the government what a terrible idea it is and to maybe come up with something alternative. So that's what we're going to do. Now, IR35 still exists. If you're a contractor, the IR35 rules still exist, and you could be investigated by HMRC, which is why it's important to make sure that you've got your tax investigation insurance. And if you're an IPSE member, you're already covered. So you know, that's what we're here for, because you don't want to be facing an IR35 investigation on your own. And that liability is still with you, the contractor, right now, if you're working in the private sector for 1 more year. If you're working in the public sector, it remains with your client at the moment.
That's another one. Are you happy just for me to? I can just field a few questions for you, Andy, and you can.
Yeah, is that okay? Because I'm
yeah,
unable
that's
to
fine. No, I've got them up in front of me. We do. I should say we have absolutely loads of questions here. So I think what we do once this comes to an end, we'll make sure we've got a note of the questions and who's asked them, and then we'll do our best to kind of post a kind of wash up Q&A, either on the website or sent out to those who are attending this afterwards. So with the shift to end clients determining IR35 status and HMRC adamant this will become law, even if it's not this year, should we put more focus on educating end clients? Many seem to be taking a risk-averse approach by refusing to engage with contractors.
Yes, very good point. We have done a bit of that in the last year. We've written a guide for clients, and we've written various articles explaining why it is a very risky thing to do for end clients to just put everyone inside IR35, and why it would be bad for their business. And so we have been, and I've been busy doing lots of webinars and seminars and going out and speaking to groups of people, in the last year, lots of kind of heads of HR and heads of tax teams inside hiring organizations, and telling them all about the ins and outs of IR35 and how it works, and trying to explain to them that you actually can hire a contractor and put them outside of IR35 and feel pretty happy and safe with that decision. The trouble is that we all know, right, because we've been doing this from the contractor side for the last 20 years, that you can feel as satisfied as you possibly can be that IR35 does not apply to one of your engagements, and HMRC could just come along and take a different view. And you're then involved in a horrendous investigation, which will take up all your time and be deeply stressful and annoying. You don't want to be in that position. And that's why we saw so many clients taking the risk-averse approach. But I hope that given this extra year, I mean, our main focus, to be honest, this next year is going to be stopping the legislation coming in, because as much as we can do client education, I think you're still going to get clients who say, we don't want any part of this, we're not engaging contractors, and that's what we want to avoid. And the only way to really avoid that is to make sure that those private sector rules don't come in at all.
Another one on IR35, then I'll try and get around to a couple of the others. You mentioned that current SDSs are now effectively void. My client has already given me an outside IR35 SDS. How much does this protect me against investigation from my current contract pre-April 2021?
I'm afraid it doesn't protect you at all. HMRC could come along and investigate you, and you could say, oh, well, my client gave me this SDS, which put me outside. Now, I don't think that will be entirely unhelpful, because it is a sort of a little bit of anecdotal evidence that someone else had a think about this and thought that IR35 didn't apply. But HMRC could still investigate you. They may disagree with it. And it has no legal standing, basically. You can't just use it and say, here it is, here's my get out of jail free card. You could still be on the hook, despite the fact that I'm quite sure that your engagement is outside of IR35. HMRC don't always understand or see things in the same way that most of the rest of us do. So you could be on the hook and investigated. So get your tax investigation insurance in place is what I would say.
We've had a few questions on the issue of tax deferral, which the government has announced. So is that self-assessment deferments for all taxpayers, like limited company contractors, or just those formally registered as self-employed? And also, would the corporation tax payments also be included in that deferral?
No, corporation tax I do not think is included in the deferral. And we have submitted a suggestion to the government that they could look at corporation tax in this time of crisis and either defer it or suspend it for a period of time, or reduce the rate of it temporarily for a period of time. These are ideas that we've put to them. The payment on account thing it's mainly paid by sole traders, self-employed people. And what you do is, the way it works is that you pay some tax in July, which is built on whatever you pay. It's a projection based on whatever you paid the previous year, and it goes towards the tax payment that you'll ultimately settle up at the end of in January. People, limited company contractors, limited company directors who draw down a dividend also have to pay payment on account via self-assessment for the dividend tax or the income tax on their dividends. And I think that deferral will apply there as well. That is what I think, but we are seeking clarity from government on
that. Just a few more, a couple on universal credit, which we may need to come back to some people on. Just on the question of savings, and do company savings count as part of the kind of eligibility criteria for that? Andy, I'm not sure if you know.
Yeah, I think we might have to come back on that. I mean, the truth is that at IPSE, we are not experts on universal credit. We are suddenly finding ourselves in a world where some of our members may, for the first time in their lives, completely unexpectedly, be considering making a claim for universal credit. The one aspect of universal credit that we do know about is around the minimum income floor, which we've campaigned to have basically reduced or lifted. That now has been suspended. But on these technical questions, I'm not sure. I rather suspect that if you had money in a company, if you're a shareholder of that company, it probably would count as your savings. That's what I suspect, but I don't know. We would have to try and seek some clarity on that one.
And then a kind of tricky one as well, which I know that we're definitely trying to kind of get more clarity on. Can salaries be increased to a higher level to enable a greater 80% claim? Again, I presume this is for those who are kind of employed by their own limited company.
Yeah, I think that they're going to be looking at historic data on this in order to work out what the entitlement is. So I think the answer is unfortunately no to that question. We are also seeking clarity on that one. I've been tweeting a bit about that one, because obviously if it was possible for you to just up your salary now, then that would give you a much greater entitlement on the 80% terms. But I suspect that will not be possible. That is my suspicion, but we will see, and we are seeking clarity on that one.
One final one. If applying for ESA, do you have to be able to show you were working before the crisis, or if no current work due to IR35, are you still likely to be eligible? I suspect this may be one that we will have to go back and get clarity on as well, Andy.
Yeah, I'm afraid I don't know the answer to that one on ESA. I don't know, I'm afraid. But we will try and find out. And what we'll do is we're going to forward on a lot of these questions, because there's still a lot of people don't know a lot of answers to a lot of these questions at the moment. So we're going to forward these on to the relevant government departments, which we do have links into, and seek some answers from them on it, and then we can report those back right from the horse's mouth. That's the intention.
One final one, because I think we will have to wrap up. Is there an appeals process for public sector if your contract is deemed outside R35, but they are now saying it's inside?
I'm not quite sure I totally understand the question. So the client there is saying it's inside IR35. No, there is no appeals process at all for that. And that was one thing that was going to be introduced with the new rules, which was going to be applicable both to the new private sector rules and the public sector, was this client-led dispute resolution service. However, we were always quite sceptical about it, because all it really gave the contractor a right to do was to go back to the client and say, I disagree with your IR35 determination. Perhaps here is some evidence which I think goes in my favour. Maybe I've had my contract reviewed. Maybe I've done my own CES tool determination. Maybe I've collated a bunch of emails which make it pretty clear that I am nothing like an employee, all of which would point to the fact that IR35 doesn't apply. And then the client would go away and have 45 days in which to come back and decide one of either, okay, we've considered your representations and actually we think you're right, or we've considered it and actually we think we were right all along and we're sticking to our determination. I think in most cases they would have done that anyway. So it may not have been all that helpful, but now that's not happening. Not in the public sector. That there is still no client-led dispute resolution service. Okay, but go on then. You've got one more?
No, I think that I was just about to,
okay.
to hand over that.
Yeah, we better go because we've taken up an hour of everyone's time already. I mean, I just want to reiterate to everyone who's on this call, thanks so much for all your support with the IR35 thing. We really kept it at the top of the agenda. And, you know, that Lord's inquiry was a great platform for us. And I know that a lot of people submitted their own evidence to that inquiry. And it really did hammer home to that group of politicians that this was a extremely troubling bit of legislation, to put it mildly. And I think that helped keep it at the forefront of the agenda. So when this crisis did hit, the government were pretty quick to row back on it. It did come a little too late for some people, but we still think the delay is welcome because we live to fight another day on that one. So thanks very much for listening. Thank you, Alasdair, for talking us through the very fast changing world of the government's response to the coronavirus crisis. We will keep our web pages updated on all of that and on IR35, and we're going to keep lobbying on IR35, and we're going to keep coming back with these webinars and updating people too. So thanks for listening, and we will hopefully see you again soon. Bye.
Thanks, everyone.